Welcome back to this week's market update. Today is Monday, April 28th, 2025, and we'll jump right in. Stocks saw some pretty strong gains last week as markets grew more optimistic about a potential US-China trade agreement. The Nasdaq Composite rose 6.7% last week, followed by the S&P 500, which was up 4.6%, the Dow Jones Industrial Average, which was up 2.5%, and even bonds in the Barclays Aggregate Bond Index were up about 0.75% last week. Shifting gears into our economic data from last week, it was a pretty quiet week with a few data points in real estate, as well as the LEI and Tesla earnings. So we'll take a look at those, and then we'll also look at the many data points coming in this upcoming week. But first, existing home sales for the month of March came out last week. It showed March home sales fell 5.9% at a seasonally adjusted rate of 4.02 million in March here, down 2.4% from a year ago, so slow down from February as well as from a year ago. Inventory crept up a little bit from 3.2 months worth to 4 months, so houses seem to be sitting on the market for a little bit longer. And then the median sales price saw a very modest 2.7% gain from a year ago at 403,700 for the median home sold. In contrast to existing homes, new home sales in March surprised to the upside at a seasonally adjusted rate of 724,000 homes sold in the month for a median sales price of 403,600, which is just in line with what an existing home sale was in the month of March. So we have seen the median home sales prices of new homes fall quite a bit. They are about 12.3% lower than the peak that we saw in October of 2022, where new homes were sold at a median price of 460,300. We have seen sales volumes here remain pretty resilient, although it seems like the pricing power has been a bit softer in the last year or two. In addition to the housing data, we also got the leading economic index from the Conference Board declining 0.7% in the month of March, driven largely by notable drops in three components, and those were stock prices. As we know, it's been a choppy start to the year in the S&P 500, as well as average consumer expectations for business conditions put a bit of a drag on the index in March as well. And then last but not least, the ISM New Orders Index also put a drag on leading indicators, although we have broken above this recessionary signal. So the LEI continues to be bearish, although when it is above this red line here, it has broken through the recession signal, which is generally a good sign. Tesla reported a first quarter earnings miss last week with automotive revenue down 20% year over year and net income falling 71%. However, shares rallied as CEO Elon Musk announced that he will be dedicating more time to the company starting in early May after several months in Washington, D.C., working with the Trump administration. Optimism was further supported by a shift towards pro-autonomous vehicle policies as U.S. Transportation Secretary Sean Duffy announced a new framework to help U.S. automakers become more competitive, benefiting Tesla's self-driving ambitions. And here you can see the stock price last week, a bit of a jump in the early to midweek with the earnings announcements, and then another jump when those pro-autonomous vehicle policies were announced. Finally, in the week ahead, we have quite a busy week coming up. So we have earnings from several large tech companies, Microsoft, Meta, Apple, and Amazon. So those will be very crucial for determining market direction this week, especially as they do make up such a large percentage of major indexes. We'll also get the first estimate of first quarter GDP. So that will be very important to seeing the health of the US economy. PCE inflation, consumer confidence, and then the April jobs report on Friday morning. And taking a look at some of the more higher frequency data that we get, initial claims, this has been pretty steady over the last year. It's actually been trending slightly down. So this is a positive indicator. However, things like severance pay can distort the jobs data a little bit, especially in the government sector where many are receiving severance pay for several months after they have left the federal government. So a little bit of potential volatility there, but wanted to bring attention to the very busy week that we have ahead. Thank you so much for tuning in to this week's market update, and we look forward to providing another update to you very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.